So it's currently Sunday, 9 a.m. So I'm going to do this past week two of March, the recap of it, how we traded, how 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 I was viewing price, and yeah, that's basically it. Like every single week, I do just for YouTube because I did my weekly review yesterday on my notebook, on my notes, physical notes. Now I'm going to do a little bit more extended version. Why? Because yeah, just because yeah, it's a task that I have to do every single week, and that's okay with me, and I'm not burdened by it. So that's a thing that I actually enjoyed because I started doing this last year, December, because I was like getting uh tired of doing the weekly review with notes and with not with notes but with print screens, writing on the chart, then then taking a screenshot, putting on the Notion. But now I do it differently, and I find it way more enjoyable than most of the times. So for this week, I'm going to just read my notes, what I was expecting, and how they went. Not going to deep into those because I already did that yesterday. But today, in this week two, from 11 to 15 of March, we had an high impact week. Why an high impact week? Because of all of these news. We had Monday with no news, like most Mondays, which already tells us that we are more probably, we're more high likely to see consolidation. So this weekly candle, is it going to move or it's going to stay quiet, do nothing? News. By the news, even though that's Monday, I'm going to do this based on the weekly time frame slash weekly view, but you can do the same on a daily. So Monday has no news. This Monday is followed by a Friday, which make made this eye of the week on week one. So what is expected to happen on on Monday? So is it instead of being weekly candlestick right here, imagine that you put daily candle. Is it going to move or it's going to stay quiet to nothing? So based on the news, is that day, that week, that month, that 4 hour, whatever, that 8 hour going to move or not? Then you go. Is in what day? Now it's talking about the week, but imagine that it's the day. So in what hours is price more likely to have a lot of volatility? What are is imagine that we are now on Tuesday, right? So instead of Tuesday, where is price likely to move? So based on this news, I can say that between 3 a.m. to 4 a.m. you can move a lot, which is a 1 hour candlestick, and you can encapsulate that into a 3 hour. So the 3 hour candlestick between 3 and 5, it's going to move, followed then by the CPI. So the 3 hour candlestick between 8 a.m. to 11 a.m. can move a lot. So you then choose your pockets of time where price is likely to move. I do this in a weekly basis, where instead of saying in what hours of the day, I ask myself in what days of the week, in what days of the week, and you can change this for whatever candlesticks. So imagine that this is a month. Is the month likely to move or is it likely to going to stay quiet? Do nothing. This is based on news, based on past price action. Because if a previous month has expanded a lot, or you're in a what is it, a seasonal tendency of consolidation, then you can already say no. So then you want to ignore that candlestick in itself. But following that, measure that they are doing the monthly, is the monthly likely to move or not? Okay, it's likely to move. The, the monthly is likely to move. In what weeks of candlestick, you not days of week. So you always want to go from one to another, from week from month to week. In this case, I'm using the weekly candlestick, but you can do or you can even do like an 4 hour candlestick. Is this 4 hour candlestick likely to move or not? Okay. In what 1 hour candlesticks inside of it is price more likely to have volatility. So in the 4 hour candlestick, price is more likely to move on the C2 and C3 or Q2 and Q3, right? Uh, and then you do everything rest. But based on my studies, based on what I do my weekly forecasts. Sometimes I do also my monthly, but they are not that important to me. I prefer trading the weekly and daily reversals slash PO3, whatever you wanna call it. But based on the weekly, if it's going to move a lot, then what specific have the specific days. So my specific days for this week were Tuesday and Thursday, where I traded Thursday. Didn't trade Tuesday, even though I started a setup. Not I was not that confident in my CPI analysis, but these were the days that I chose. Didn't choose Monday, or didn't choose Monday, chose Tuesday, didn't choose Wednesday, chose Thursday, didn't show Friday. Right. Right after it, where is weekly candlestick likely to go? This is your usual things: drawing liquidity, when, how, like a quick game plan. You want to engage on the first weekly half, on the second weekly half. You want to engage in what days? Same thing right here. So this is both are like coupled together in a major point. So instead of being 2, 3, this is 2.1, 2.2, and so on. And then I failed this week, and this week I learned that there's no need to try the inside weekly candlesticks. So now going to the charts, we can see that we have an inside weekly candlestick, and those two trades are a pain on the ass. I think that they are enjoyable and worth to trade. So this is my weekly candle document and everything that I learned from my experience. I put here to try to make my way of a more flexible but well thought and preliminarized weekly gameplay. So I already mentioned the news. We had a lot of news. So I mentioned that the week was likely to move, but we are more likely to range. So I especially mentioned this previous week one training candlestick. So after an expansion, only comes two things: retracement or reversal. So already had that in mind. Mentioning that the previous week one, previous candlestick before this week two, price had an expansion in every single major pair. GU major bullish candlestick, and me looking at this, I personally I'm more bearish right now just by looking at this candlestick because I didn't look at it a lot because a problem that I have trading is that I hyper focus on EU. I hyper focus on EU and then I don't check sometimes. I forgot to check intermarket relationships. So doing this helps me to get a better idea of what price is doing. But with a very weakly bullish. So what I'm viewing this, I'm viewing this right now as an order block. This could be now week 2 retracement expansion, and this instead of a manipulation will be an expansion retracement expansion to then continue on the upside. But because of the SMTs, failure swing, turtle soup, right here we have a big bulky candlestick into a drawn liquidity, equal lows lefting. Now you can use this range as an order block to try to catch a lower short. A lower short, not just a short, not a lower short. Where is the tool? Oh god. So we'll try to catch some short right here. This is just by uh, identifying the current delivery system. Just 1 second, please. So based on that, I'm already next week more inclined to be bearish. But not going to focus back on the Bayesian game plan for the past week. Uh, Same thing on the DXY. Big bulky candle into a possible reversal slash continuation POI. The price can now go back to these possible highs and then back to the more highs above it. Sorry, that was not going to show. But DXY traded into early discount. EU traded into early premium, so yearly, sorry, no, not early, yearly discount, yearly premium, yearly high made on GU right now. The year has not ended, but this is currently the yearly high, early, not early, yearly high. I believe that the DXY is likely to continue lower, so I was wrong. I was actually looking for DXY lower prices. After that, it's going to continue lower, but the first half is likely to trade higher as a range candlestick, creating a retracement weekly candlestick. So I was wrong right here, where I mentioned that I was expecting higher prices on first half, and that's actually true, and then followed by lower prices the second half in a more rangy candlestick. But instead I got higher prices, retracement, back higher prices on Thursday. So meaning that if I was bearish on the XY overall, I was bullish on EU, and I got caught in trading this inside candlestick, which is now a new data set for me when it comes to trading inside candlesticks. Uh, This means that EU can trade lower on the first weekly half before going higher or inverse. So by this I was saying that I was looking at this week. So if I get the tool once again, right here, yeah. So imagine that this is the opening of the week. So open. I was expecting to see DXY trade higher, so EU lower before trading higher into the week 1 high, and then go back lower. Some type of range candlestick like this. That was my whole idea. The idea is that the week is likely to have a lot of movement, but in a closer aspect instead of a range, not trend candlestick, not trending candlestick. So first and second point, I was mentioning that I was looking for price to move, but in an inside format, in a range candlestick. So I was identifying that I was not looking for the usual trend, right? Creating a trend candlestick, a big bulky candlestick. I was not looking for this, but I was looking for something. Right, it's trading lower, late reversal, below weekly open, above weekly open, once again back to the weekly open. Something like this that I was looking for. So I acknowledge that there was a lot of movement going to be made, but my direction was wrong. Important week to watch and see. Why? Because after an expansion only comes retracement or reversal. If it comes to the reversal, you want to be part of a reversal, right? That's why we trade turtle soup. That's why I trade turtle soup. That's why I'm putting my work, putting my time learning this turtle soup method, because after learning it, you can try to catch the reversals. So if you knew that, of course, that we are not perfect, but if you knew that this was going to be uh, this week 1 expansion end was going to be, because when an expansion ends, starts another thing, right? Let me just make this. I need to go into the week, so this is the market efficiency, right? They have expansion, okay, something like this. This is accumulation, expansion, then reversal, R1, retracement or reversal. So what we had praised on the previous week, what we had expansion. Accumulation was when maybe a low time frame accumulation that isn't seen, but we have an expansion, and then we have to choose: is it either going to retrace and continue? So it's either week one going to week two after the week one expansion going to retrace, and then week three continue and expand once again. So it goes from here retracement back to expansion, or it's going to reverse. And that's the not difficult, but that's the question that you have to ask every single time after an expansion. Is expansion a displacement swing, or is expansion a manipulation swing? Because if the expansion is a manipulation swing, then you're going to be followed by an R2, by the reversal. If the expansion is a Judas swing, then reversal. If the expansion is a displacement swing and not a manipulation swing slash Judas swing, then it's going to be followed by retracement and then a back OTE, right? Then expansion. So this is the question that you have to ask. And for me, I was thinking of this as an uh, week 2 retracement to then continue. I was indeed looking for price to even go back to the week 1 high this week. But now doing this recap, which is very helpful for me and I think for someone that is watching, is that I'm now more a believer that it's going to be a reversal and down price action. So that was my bias and game plan for the week. Important week to watch and see, especially because of this. Because if you want to trade turtle soup and reversals, there are three types of turtle soups. Continuation, which is trend turtle soup. So there's a bullish buy model, right? And then it's a bearish turtle soup happening after a retracement. A bullish in this case. Then we have the reversal, which is trying to catch the weekly highs and weekly lows. So that's that type of turtle soup. And then there's another one that is the range turtle soup, and that's more likely to. That's what happens. I'm going to do a drawing. I can be completely wrong, and if Romeo is watching this or someone's watching me, I can be completely wrong. So the first thing that the market does is accumulate, right? Right. Imagine this is the accumulation profile, and price needs to leave the accumulation into an expansion, right? So what happens next? We accumulate. We add this. Let's not mention this the turtle soup. Let's mention that the turtle soup was this. We had the accumulation and a big expansion down like this. Now what we view this, we have accumulation and a lot inside of this accumulation there's an expansion, because the expansion is not this. Imagine that the expansion is this, right? This is the real expansion for that item frame candlestick. This is a weekly candlestick, but this low time frame expansion was the turtle soup to then reverse. So we reverse on the upside, which is the expansion weekly, so daily expansion, monthly, uh, no, daily reversal, right? Weekly expansion. This can be followed by what? So you have a expansion on the item frame, then it can be followed by either that retracement that I talked, then continue, right? Or this is where a lot of times, even myself, I get caught on the OT, fake OT, and then price goes lower. So that's basically it. That's not the best way of explaining, because I'm not new, but I don't have my clear definition and clear way of thinking. There's a lot of more study that needs to be done. So that's why I don't want do not want to dive and go deeper into this topic, because you shouldn't be learning from me. If you want to learn this, learn from ICT, or the other one that I can vouch that teach me a lot was Romeo TPT, no TPT, or whatever it's say. However, it's sad. So yeah, that's my time frame bias, my bias, and even a forecast for next week. So Geo is there's a very high probability eyes that I'm looking at, even at a 2 week perspective. big bulky, gap lower in inversion, bullish SMT, so low resistance liquidity run. GU is actually cooking a very possible downtrend for the next couple of months. Now going into EU and doing the weekly recap finally. What can I see? An inside candlestick. So week 1 expansion, week 2 question mark. What can I see? I don't even know. It's an inside candlestick. After inside candlesticks, there are always an outside candlestick into the previous inside and then an outside. What do I believe right now it's going to happen? I wouldn't it like to see higher prices. I'm going to be honest. I would like to see higher prices on EU. It's showing me that it wants to go higher. But based on this range, from range low, range high, and price is rejecting the equilibrium and not trading above it, this for me tells me that the price is going to go lower. And a similar situation like this happened on a low time frame candlestick. What do I mean by this? Is that this fractal idea of range low taken back to equilibrium, back below the range low to trade lower, this idea actually happened in a low time frame chart. Inside of this candlestick of this week 2, this right here happened because I got caught on it and I got wrong. I had a winning trade. I can show you. If someone is watching, I don't even know at this point. But I had a winning trade. But this exact console this perfectly thing happened on Thursday, where I got caught expecting right here. Let me show you. There's not the range. No. So this is the range from this range high to range low. Price went back into OT. So imagine this as a range and two. I'm going to the week. I'm no more talking around. That's why I have to have bullet points on my side. Yo, can you open? Okay, thank you. Range high, range low. Or was this a range low? I don't care. Middle point right here. I don't know if it is. I think it's yeah. This is the 8 hour. To look at what see by yourself. Range high, range low. Taken one time. Taken one more. Back to OTE. I was faked by this Wednesday high, where I believed that price is going to retrace and then continue on the upside. That's why I buy. Where I bought on Thursday. I bought expecting higher prices, and I was wrong. Instead, the price range low, turtle soup, back to OTE, failure swing, and then lower prices. That I got caught on that. So I'm electing to do the same thing now on the more high time frame profile. Mean that now I'm looking at this the same way as I will be looking this high time frame range, this monthly range. I'm viewing it as the same idea, same concept that I got caught on Thursday on the low time frame range, on the 8 hour. So inside candlestick, weekly high, weekly low, weekly open fixed time, Sunday 5 p.m. price open, made not right after, but then we made a premium week. I don't know where. I can't say where. I know because I watched the week, but if you're just watching this weekly chart, you can say, oh, that was made on Thursday. Oh, that was made on Friday. Oh, you can. There are more high probabilities that this indeed was made on Monday or Tuesday because that's a very small premium week. But you can't be sure of that, right? And if you go lower, you're going to see that this idea of, oh, Monday after the week slash Tuesday after the week was wrong if you're just looking at the weekly candlestick. So weekly open fixed weekly time, high of the week, lower prices making the weekly low, weekly close fixed time. On daily chart, we can see the entire week candlestick. where after the Friday I made on week 1. So this week 1 second change instead of delivery. Why second change instead of delivery? Because look at it. The first change instead of delivery inside of quotation marks, but like I mentioned, I think in a lot of videos, a candlestick makes two always to change instead of delivery. One change to make the low, one change to make the high in a bullish candlestick, or the opposite from it makes a bearish change instead of delivery to make the high, or a bullish change instead of delivery to make the low. And that's it, it's in an open high low close slash bearish candlestick. So price on Monday open small premium week trade lower into this fair value gap as a range. So you have this Monday range concept already. Look that we are trading inside of this 2-day candlestick. So this 2-day between Thursday and Friday, which was this big expansion, right? With Friday making the high of the day, high of the week, and very possibly high of the month, if a reversal is indeed happening. So this is then followed by Monday, small, not small candlestick, but C1, followed by C2 on Tuesday, with price trading lower below the weekly open, below the below the Monday low, which is then followed by this low time frame change in the set of delivery, making this weekly low. I got caught on this on trading the pattern of Tuesday low of the week. So yeah, then on Wednesday, after this Tuesday low, and we can see this C2, right? If you know the C1, C2, and C3 model from Romeo, this is what it talks about. Manipulation, distribution. Distribution is equally as the same as expansion, right? So from Tuesday low to Wednesday high, there was an expansion swing, an expansion move. Now, what's going to be happening after that? Is a retracement expansion, my idea, my bias on Thursday, or it's a reversal going to happen? I got wrong. I was expecting the Tuesday low of the week. I traded the pattern of Tuesday low of the week, Wednesday expansion, Thursday retracement to then expand once again into the week 1 high, which was my bias. Completely wrong. Got stopped out. Not stopped out, got I closed the trade in a little bit of profit, but then it was followed by this Thursday big bulky candlestick on the downside, making a big expansion, trading below the Tuesday low, making the Friday low. So from the Tuesday low to the Wednesday high, this is the manipulation swing. This is the Judas swing. And notice that before this Judas swing happened, there was a pre-manipulation move from Monday high to uh, Tuesday low. There was a pre-manipulation. So pre-manipulation starting point was Monday high. Pre-manipulation end was the Thursday low, and the Tuesday low, and the pre-manipulation end is the same thing as a manipulation start. So manipulation start was the Tuesday low, manipulation end was the Wednesday high. Now this is where it differs. Is it manipulation slash Judas swing starting point to Judas swing end right here, or is it a displacement start to displacement end, which starts a retracement to then expand once again? In this case, I was inevitably wrong. Was a manipulation start, manipulation end, and after a manipulation end, what is next? The reversal starting point. And reversal starting point was Wednesday high, Thursday failure swing, making the high of Thursday, and then a big down close candle downside, trading into the manipulation starting point, which was Tuesday low, trading lower, followed by Friday low of the week to close and cap the weekly range. I just don't understand why on some charts some things are showing and others are not. This one is just on the weekly. Yeah, go away. Thank you. Okay. On 12 hour, we can see it from the Tuesday 5 a.m. So the Tuesday second daily off, which is the morning cycle, to the Wednesday morning cycle, making the high of the day. Price was then reversed lower and lower. We can see that we have three 12-hour candlesticks. Three 12-hour candlesticks. Remember, I see you saying that sometimes there are three. Where can I see more of these three pattern? A lot of times this happens. It just depends on the high time frame. Three up close candles, reversal. It's just by looking at the charts and understanding the narrative. But there are a lot of times that I'll let you know that ICT mentioned about some if there is three down close candles followed, that's another block, and you have to measure the cost quantity, not mean threshold, 50% of those. So yeah, that's basically what I'm saying. So three up close candles from Tuesday low, Wednesday high. I was believing this to be the displacement swing. I was wrong. This was the expansion swing. Price reversal on me. Trade on downside. Friday low of the week. Wednesday high. Wednesday Wednesday 5 12 hour. Friday low. Friday. It's not Friday. It's Thursday. Thursday 17, which is 5 p.m. Meaning that was in the first 12 hours of Friday. Price made the low. Same thing on the wait hour. You can see weekly open, pre-manipulation move, Monday low taken, Tuesday low as the expected low of the week. Wrong. Expansion on the upside, above the weekly open once more. 8 hour rejection block, failure swing, then lower prices with a big bulky displacement lower, closing below it, trading inside of this bullish order block, which you can see that price traded perfectly into this eye. And as a quick narrative for next week, if you are still watching, is that Monday is going to expand lower. So next week we can trade Monday if you want to. I will not be doing it. I can leave a Monday for next time, but I'm looking at these, possibly these lows right here, and even lower. So on the 8 hour, what can I see? So it's once again Wednesday. It was between 5-12, so it was in the second daily off. This either can be the C2 or C3. Okay, it was the three. It was the third 8 hour candlestick of the day, which is between 9 and 5 p.m. In this case, what can I see right here is that it was still on the first, so it was Thursday. I write it more right here. It's on the Thursday, same thing here. Friday, it's Friday because it's Friday. First 8 hour, which is between 5 p.m. and 1 a.m. of the next day. It's then followed then by the 4 hour, and then on the 4 hour I think I will be ending. I don't have a lot of more to talk. 30 minutes of talking. I'm actually with my very thirsty for some water. But weekly open, pre-manipulation start, pre-manipulation end, manipulation end, pre-manipulation end equal at something start. So if this was a displacement swing start and not a manipulation start, this will be viewed as manipulation start and manipulation end. But because this manipulation originated another high time frame of manipulation to make the weekly high, I need to view this as a pre-manipulation. So this high was a pre-manipulation starting point, pre-manipulation end, which begins the manipulation starting point. So manipulation starting point, manipulation end. Manipulation end means that the reversal is going to happen right after it. If it's not a reversal, then it's a displacement end, meaning that the retracement is going to start and price is going to continue on the upside. So I think that it's everything for this week. We can see this then Thursday after we can see this small candlesticks after Monday I was taken. That's important. After Monday I was taken, accumulation showcasing that price is going to reverse and reverse and expand with energy, followed then by this turtle soup, which is a 4-hour CB, and price quickly traded lower and lower, taking these equal lows down on Tuesday CPI. Remember that Tuesday was CPI. We made CPI lows. CPI after the CPI lows price wasn't bullish, so everyone is trying to continue chasing the bullishness after CPI, and that is followed then by a quick reversal into those that are bullish, expecting higher and higher prices. Just to end, because 4 hours is important for me, this was the Wednesday 5th 4-hour candlestick, 5th 4 hour, which is the 1 p.m. First data it's between 9 a.m. to 5 p.m. This between this already has the time right here. Thursday 17 12-hour. Let me put 5 p.m. It's better. 5 p.m. 5 a.m. First 8-hour, which is the 5 p.m. to 1 a.m. and that was made on 9 p.m. So then Thursday, it's Thursday, Friday first or second 4-hour, which is the 4-hour candlestick, 9 p.m. from the previous Thursday as a range, basically. So that's it. Hope you enjoyed. Hope someone is watching. Not hoping. If this is valuable, someone will be watching until the end, because I think that, yeah, I know a little bit, and that's all. Have a nice week. Have a nice have what does ICT say? Have good luck. Stay safe. No, good trading. Good luck and good trading. I don't know. Good luck, good trading. Stay safe. Hope I see you in the next for recap of the week 3 of March. That's it. Bye bye.